Hey guys, it's Hima here. It is chart of the week time and I have a look at select XLC stocks for you. Today's Thursday, September 26, 2019. Before we take a look at the chart, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So one of my members had a question about a stock that's an XLC component, and I decided to take a second look at the entire sector. And there are 5 stocks that are in interesting different junctures that I think you should keep an eye on. So Disney, DIS, has been falling lower after a really strong run-up. You can see it had this big, huge gap back in the spring. Now, it didn't quite return to the gap, but it's making its way there. And my analysis shows that there's a good chance that this stock continues to weaken into October 4th. That's next Friday. Now, along the way, there are supports to monitor. There is the high from the gap, there's the midpoint of the gap, and then there's the high that created the gap, so it's the low of the gap. All of these are key supports to watch along the way. Now, if price doesn't continue lower and it starts recovering from current levels, then I would really only be excited for the big picture uptrend to resume if price gets above 140.08. Now moving on to Dish Network, so ticker DISH, one letter more than Disney. On this chart, you can see that we had a really sharp fall in July into early August, a recovery, and are now attempting to move lower again. I think that this fall is an important one to monitor because the shape of it looks like it might just be a correction against the uptrend that's been in place. And a move above 35.17 would confirm that. It would suggest that this is all just a pause and there's renewed upside to 37.28 and then beyond. But if price keeps falling and keeping this 35.17 high intact, then I'd keep an eye on the 32.50 low. If we break below that, I think there's a good chance of a retest of the 30.58 low, as well as further downside towards 28.24. Netflix is another XLC stock component, and this stock is in a very interesting position here. So I think that the current recovery after testing support at 254.50, so the low being 252.28, has room to go. And interestingly, it also is into the October 4th date. So it looks like October 4th is going to be a pretty important date. The non-technical factor that I can think coming into play is that is when non-farm payroll data will be announced. So the news coming out could be a catalyst to price action. So again, I'm seeing the chance for Netflix to recover into next Friday, but I don't think I'm going to trust that recovery as the low because a lot of things have to happen, namely a move above 301.55 for me to be confident that we'd move back up to this resistance cluster just under 340. On the other hand, if there's a return lower and Netflix doesn't really rally into Friday, October 4th, then I have 2 supports to monitor below. All right, ticker T for AT&T. Here I've got a weekly chart showing you a little different point of view because the weekly chart of AT&T shows that this run-up that's been in place since the end of last year is coming up into multiple points of resistance, potential price ceilings. There are 4 different ones, all clustering around the $40 mark. So even though there might be further upside on this stock, I'd be very careful about any long positions when it gets towards $40. Now let's take a look at the daily chart to refine. So you can see when you come to the daily chart, the recent price action has just been kind of sideways and hanging out. So what is the price support or potential floor to watch? The first one is the high that created this gap. So it's the high from September 6th, 36.37, which is the low of the gap. If price moves below that, then I think there's a good chance that we come back down towards the 34.50 area. Last but not least is VZ Verizon. This is the stock that one of my members asked about, making a good point about the RSI power zones action versus the price action. Now, big picture, you can see that it's coming into these old highs that could provide resistance in that 61.20 to 61.60 area. The thing is, just because there's resistance up ahead and just because momentum might be temporarily slowing down, that alone isn't a sign to sell. And that alone is not a sign to get out of longs. I'm monitoring support at 59.19. If price moves below that and posts a daily closing break below that level, because of the nature of this entire giant sideways range, I think Verizon could come back to 55.62. Again, if it posts a closing daily break below 59.19. So that's my take on select XLC stocks for you this week. I'll catch you next time. You can sign up at himaready.com/tribe gift to get access to more hot, timely, and actionable market analysis.